Alive, ladies and gentlemen. Thank you for joining us today. I want to start by thanking all the new Bear family members who happened to click subscribe from the Around the Blockchain panel that we joined from the BitBoy squad. Thank you guys for doing that. Because of that, we've actually hit a milestone for the Arcane Bear family, and I figured we'd just go ahead and point that out now. Even though it says 39.9 thousand, we actually crossed the 40,000 Bear family strong mark, so thank you guys for that. I appreciate all the newfound support. Today I wanted to go over something that I thought you might find interesting. Now, through my studies and my research, one of the things I stumbled into today was the thought around noise and signal. And I spend a fair amount of time studying music, playing, practicing, and whether you're out of time or out of tune, it's usually this kind of rhythmic difference that really pushes us to look for where's the noise and where's the signal coming from. So I wanted to start today by looking at this, not this one, where was it here? Oh no, it was supposed to stay opened. See, there's a little bit of noise for us right now. Aha, here it is. Michael J. Burry's post. Yesterday we were talking about inflation and how we see inflation show up in prices, but it's really the degradation of the dollar. Therefore, you need more dollars to buy the thing. Not that the price goes up, it's that the value of the dollar is being degraded, and therefore it looks like the price is actually climbing. So I like this tweet that Michael Burry made today, the guy from the movie The Big Short. He says, people always ask me, what is going on in the markets? He says, it's simple. It's the greatest speculative bubble of all time in all things by 2 orders of magnitude. Not just 1 order of magnitude, 2. That's a fairly large number. So here's Bitcoin. You may be thinking to yourself, well, how is this a relevant story? If the price of something is going up, that's just what the value of that thing is. It's like, well, no, that's not actually correct. Price and value are these intangible ideas, right? The price of something versus the real value of something can vary drastically depending on who the buyer and seller is. Maybe it's a $1,000 bottle of wine or a $100 bottle of wine. Being able to tell the difference if the label is removed may not be as easy as you would think. So what I want to start by focusing on is that on the larger time frames, we're always getting more signal than we are getting noise. One of the reasons we like to start at these much bigger time frames for Bitcoin's price, here we can see the entire last 3.5 years of price movement, is because it gives us a really clear understanding that the signal that takes place on the longer time frames is a much better understanding of value because it could switch at any moment. Right, so I've kind of gone over this in my earlier conversations for everyone, just around how, let's say you're new to the market and you bought your first Bitcoin somewhere between $50,000 and $60,000, thinking that it's going to $200,000 or $1 million. Well, you might think that you've made a mistake and you're down in price right now. Well, you actually we could say you did make a mistake. We're not going to pat you on the back for that one. You maybe entered at a near top of one of the market cycles. And this is normally when most people get interested, is they get interested in the price, and over time they fall in love with the value of something. So let's say you bought the all-time high of around 56,000, at least for the moment, 64,000, just anywhere in that area. Well, let's go back in time. And again, what we're trying to do is flesh out an idea around signal and noise and how to maintain the focus on the strong signal when there is so much noise in the markets. Oh, there's inflation, everything's going up. We're going to use some of that noise, again, to really go through something I think here that is really valuable, and one of the things I've been meditating on today. So again, excuse me, these late evening episodes are going to be a little bit more, let's say, eclectic and outside of the box. So back here, now we're looking at 2014 through 2017. Again, we see a very similar accumulation pattern take place, and it takes around $1,200 or 1,200 days for that accumulation pattern to take place before you see the start of this incredibly large bull market into 2017. Now, if we imagine that it's way back here in 2013, 2014, what most people do is they get attracted to Bitcoin as the price is going up, and often they'll buy the top. Let's say it's the top right now just for fun and conjecture's sake. the Bitcoin bull market is over. I'm just making conjecture. I don't actually think that's the case, but let's just pretend it is for right now. We're back in 2013, so we know that actually for that moment, the bull market was over, right? And this is what I think is so important, how to remove the noise and stay focused on the signal. You buy here and you watch the price of the asset that you've accumulated or purchased over the next year, basically, drop almost 80% in value. And Bitcoin's down at this point now at $200. And you're thinking to yourself, well, this sucks. I just lost the, let's say, we'll keep it simple. I bought one Bitcoin. It cost me $1,000. It's down here at $200. I've now only got supposedly $200 worth of Bitcoin, right? But I still have my Bitcoin. Yeah, I'm sure a lot of you will recognize this idea, but understanding the value of something like a Bitcoin, this potential for a global monetary standard where no government is involved, or trusting mathematics and technology to play a game that humans are probably not all that trustworthy to deal with, which is who controls the money? It's a pretty good question. So as we focus on the signal of, well, Bitcoin's strength is not in its US dollar price, let's just focus on Bitcoin as an asset, as an individual. So every time I buy a Bitcoin, that's going to represent one Bitcoin, regardless of what the US dollar price is. Just the way I would measure the value of a house. I have a house and property, and we can rent it out, or we can use it for retreats. There's a value proposition behind owning these things. So again, remember the focus of today's meditation in markets is signal and noise relationships. So in the process of your learning, because you bought the top, that's when it's the most exciting. Everybody's talking about Bitcoin. Everybody's talking about assets. People are getting rich from Dogecoin, and we're pretty close to a top. And then it comes tumbling back down. Now, if you do the smart thing, and I don't want to sound offensive here, but let's say you choose to do the smart thing, and you just only buy. Well, you know what? I think I was right for getting the Bitcoin idea properly. I just maybe could have gotten a better price. And oh, look, I'm actually getting a better price day over day, month over month, and effectively over the course of almost 3 to 4 years. You will now speed ahead in time, and we're going to rip to 2017. So here we go. Now we can see this, what was a bad decision for buying Bitcoin at $1,000, just under 1,200 days, turns around, and now you are on the way into a next upward momentum. Now, here's the tricky part. A lot of people, especially new investors, what will happen is you will make an entry here, you'll buy here, and then you'll try to exit here. You're like, oh, yay, I'm back in profit. But it's really this value proposition, the signal of, okay, why did I find Bitcoin valuable in the first place? Like, what is that key point effectively? So as time goes on, you realize, oh, wow, I was right. Not only is the price going up continually, but I got the value proposition right. So here's where we start to get into this idea of accumulation and distribution. Thinking to oneself that there is only 2 market cycles where you can buy low and then or sell high. Now, if you had just kept accumulating and it never decided to sell, and you just kept buying all the way up to $20,000 and all the way back down, there is a huge amount of value to be said for just a long-term investment thesis into anything that has value you can believe in for the long term. Now, Bitcoin has provided this very unique, and a lot of the other assets as well, provided a very unique insight into asymmetry, which is that, let's say you're limited in capital and you can only spend so much money. And you think to yourself, well, look, I don't make a lot of money. How am I going to do really well through these asymmetric moves? You have to remember that volatility and time are important features of each other. So you can't just buy it and then turn around tomorrow and sell it and have made a huge profit. Generally, any good return on investment where you're talking about 100x, 1,000x, it's going to take time. You should measure 5 to 12 years into your investment thesis at a minimum. Now, on the bright side, we're in a technological sector focused on finance that moves extraordinarily fast and around the world. So scaling here into 1,000x isn't necessarily that far out of the picture, even if you may be a little late to Bitcoin by getting in at like $100 or something, right? So you want to remove that, oh, I didn't get in $100, I'm never going to make it, because this entire sector is still in a very asymmetric position, which means the upside is basically infinite because we're battling a very unique problem right now. So I'm going to get to the end of the point of this thesis, but right now we're going to add a little bit more noise, right? So everywhere you go, you're going to hear about terms of inflation. And right now what we have open is the S&P 500 showing from 1994 to around, right to where we are today. Hey, fantastic. That's where we are right now. We're here today. So this is how it looks. This blue line that's moving through is actually the M1 monetary supply. So this is how much money has been effectively pumped and printed into the monetary system by the US Federal Reserve since 1994. Now, starting back here, we're actually moving up in a percentage based off the previous percent. So it's not a dollar value, although I believe we're at like 15 trillion or something ridiculous now. It's at a percentage price. Otherwise, the skew in the chart here would be ridiculous. So the yellow line is the S&P 500. And as you can see, we've had this kind of real growth, boom, bust cycle, boom, bust into an accumulation range in the S&P 500, and then the monetary supply just kick up. And you can see the start of 2020, or April 2020, right after the pandemic started, we had this huge jump. 30% of the monetary supply had been printed in like 400 days, basically, right? And we're probably about to see another big jump in this M2 supply. And what do we see? Nasdaq, new all-time highs. Boom, just like this. And we start to see the story of inflation taking place on a day-over-day basis. Now, this is actually boded well in your favor if you happen to own assets, Bitcoin, housing, as long as you can outpace the current inflationary markers by not just sitting in something. Ethereum is a good way to go. On the Nasdaq, a 5% growth. This is ridiculous to see, by the way. And a fairly strong subset of growth for, you're talking about copper, silver, a bunch of the more commodity-like layers in the NASDAQ. And then the S&P 500, and more the tech sector, had this amazing explosion. And look how well the M2 supply lines up with the S&P 500. So this is where we're seeing the signal, right? The purity of this signal right now is saying they're printing a lot of money. And because of this, asset prices will continue to rise because the degradation of the dollar is basically assured. They're just going to keep printing it. If they don't, the entire system would probably collapse. Nobody would like it. We'd end up in some type of kinetic warfare, I'm sure. No one wants that, right? So there is a solution. There's solutions that are being born right now. And Bitcoin is very likely, in my opinion, not financial advice, the collateral layer of this future economy. Now you get into the fun areas that I like, things like Ethereum, just finding value before it moves forward. But let's take a closer look at Bitcoin and really kind of flesh out the idea that I'm trying to get to. So right now we're looking at a 1-hour chart. So this 1-hour chart is showing us a beautiful trading range, which in my opinion looks bullish. We're likely to see a test of probably the area of the POC. If we get a spring, it'll be a little worrying unless we get back above 31,000. So we've got two options. We can go down and the bull market could be over. Remember, we started our conjecture saying, hey, let's just pretend it's over for fun. What should we be doing? Okay, we should be constantly accumulating because we know this game. Look at the signal here. They are going to print money. They've been printing money for decades now. There's no reason to think they're going to stop. So when does this game of value and price break? Well, it might be breaking directly into our ecosystem. We might be witnessing basically the measurement of monetary inflation through assets on a day-over-day basis. And that can get really distracting because what you should be paying attention to is the signal, which is a long-term variation that if you go back and even if you had bought at the all-time high of any of the previous bull market cycles and just continued to accumulate and ignored the price and focused on understanding what the value was, you always did really well. And this has actually been consistent for a lot of investments throughout time. So I highly suggest for those of you who like reading, jump onto the internet here and go and look up the books Dan Dow by Monish Prabhai, the low risk high value returns. Low risk value method to high returns is a fantastic one. And 100 Baggers. These are both good books as well. This one's talking about stocks where for every dollar you invested, you get 100 back. So for every $10,000 you've invested, you'd get $1 million back. And this goes over the last 100 years of companies that have performed that well, the stages that they were at, and some of the things that yielded those levels of performance and beyond. I think it's always good to focus on the signal. So again, we're getting a really strong signal from the monetary here. Again, here's from even more data straight from Fred here. Fred, our trusted friend, showing us all the way back to 1980 and the monetary supply in billions. So 1,600 billion, that would be a trillion? And we are out, yes, that is a trillion, okay. So we are now up at 20 trillion or 20,000 billion dollars. Okay, so here's the signal. They're printing lots of money. Asset prices will continue to inflate. Over the last 100 years, basically, there are very core key assets you could have ridden on that will perform extraordinarily well. We just happen to like focusing on financial technologies because it's got a lot of room for upside, especially in these early stages. So whether Bitcoin goes up or down is almost an irrelevant function in the story, right? For the most part. So I just want to talk about the point of this again is to show that if we're on the 1 hour, the 6 hour, a lot of this is noise and it can get in the way of your thesis. So I was reading a book today and I wanted to kind of finalize with this. Although some of you may not be fans of Nassim Taleb, I wanted to share this one. So these are direct quotes from his book, Anti-Fragile, talking about noise and signal. And I really like how we put this piece together, so I'm going to basically repeat it verbatim as best as I can, and we're going to go with that now. So in business and economic decision-making, data causes severe side effects. Data is now plentiful thanks to connectivity, and the share of spuriousness in the data increases as one gets more immersed into it. A not well discussed property of data is it's toxic in large quantities, even in moderate quantities. So the more frequently you look at data, the more noise you are disproportionately likely to get, rather than the valuable part called the signal. Hence the higher the noise to signal ratio. And there is confusion, and this is not generally always psychological, but it's inherent within the data itself. Say you look on a yearly basis for stock prices, or in this case, we are using Bitcoin as our prime example, or fertilizer sales in your father-in-law's factory, or inflation numbers in Vladivostok. I have no idea what that is. Assume further that what you are observing at the yearly frequency, the ratio of the signal to noise is about 1:1. Say half noise and half signal. It means that about half of the changes are real improvements or degradations, and the other half come from pure randomness, luck, and the universe doing its thing. And I included that last part. The ratio is what you get from yearly observations, but if you look at the very same data on a daily basis, the composition would change from 95% noise to 5% signal. And if you observe the data on the hourly basis as people are immersed in the news and market prices and variations, the split becomes 99.5% noise to 0.5% signal. That is 200 times more noise than signal, which is why anyone who listens to the news, except when a very, very significant events take place, is maybe a one step below a sucker. Okay, well, I'm definitely a sucker. I like gathering information, but it's important to be aware and understand that the data can become toxic in these large levels and actually becomes like the disease of the early investor, because you get over emotional and you start over trading and you start trying to make gains you've lost instead of understanding there's a very clear long-term signal that we are seeing here coming from things like Bitcoin, Ethereum, and some of our other favorites from Solana, Avalanche, and the other playbooks outside of that. Just our little layer one friends for now. What we're seeing is that the signal is very interested in distributed systems. So whether the bull market is over or not is almost irrelevant to me. What I like to do is find unique undervalued projects that I think have a long-term potential. That's why we go out, we look and we hunt down things like Serum. We try to find unique ideas like Mercurial, Avalanche, and we try to make consistent, low risk, investments into these potentially extraordinarily high value returns. Asymmetry in often ways. And I think it's quoted again very eloquently: for heads I win, tails I only lose a little. So I thought that tonight's talk would not be so much about like, okay, what's Bitcoin's price going to do on the 4 hour or the 1 hour or on the yearly. Let's think about what's been happening the last 2.5, 3 decades. And when we look at these charts, we see this very strong signal of money printing come in. We see an extraordinarily large accumulation and breakout pattern. The signal now is that there's no end to this money printing. They can't stop. Otherwise, we would have one of the most chaotic and it'd probably be pretty horrible to live through if they just were to stop printing. It would probably be equivalent to like a heroin addict going through withdrawals. And unless there was some more powerful plant medicines around, you definitely wouldn't want to go through that experience. Just doesn't sound all that enjoyable. So I figured that by pointing out this really strong multi-decade signal of printing that we're getting and the noise that comes from the ups and downs in the market, I heard someone, they're like, oh, the stock market is gambling. No, if you actually just played the game, and again, yeah, we're talking about a bunch of years, you could have literally done nothing but only bought and been up an extraordinarily large amount. And there are many assets in this sector, whether they're as ridiculous as a meme coin like Doge, and they have pretty much no underlying fundamental value other than, hey, this is interesting, fun, and doesn't feel as serious as the crazy people who are so tribal about like I'm my new learning adventure into stuff. I think Dogecoin is this fantastic idea of whatever I just said there. And then the more complex ideas of, well, what's the difference between Solana and Avalanche and Ethereum? Are we even out of the world of potential yet? And again, it's when we look at the large picture here, we see that first off, we're really high up. If you're new to these markets, this is an extraordinarily high area of risk still. We have a lot of room to come back to the downside eventually. And as you can see with Ethereum here as well, you had a 90 something or 88% drawdown from the all-time high back down to around $80 Ethereum on the 11th of March when when everybody ran and locked down their borders around between March 11th and March 20th, basically, to where we are today. And you want to highlight on the signal, and the signal will start in these really key moments where people are scared shitless and they're literally dying in the streets. I was like, maybe I should buy horses for my farm right now. Like, that's a scary moment. I've never seen the world locked down before. And that's usually where the investment thesis starts. This is why you hear echoes of quotes by people like Mr. Baron von Rothschild, who said, buy when there's blood in the streets. That is a literal sentiment. If you go back to March 11th, and sell when there's euphoria. There's a fair amount of euphoria in the markets right now. We're really high up. Look at it. We're really high up. And it's really easy to get lost in the noise of the day-to-day when you look on these smaller time frames and you go, okay, well, yeah, we're going to go up and we could be going to $120,000 and we're probably going to go to millions of dollars. And you let this small little bit of noise push you in or out of the market when, for most people, like 90% of the people out there, your best bet is to basically just always accumulate assets. And when you have big upsides, rebalance your portfolio, buy yourself a horse, build a pool. I don't know. So I hope that was helpful. I hope I brought some signal to the table for everyone tonight. Again, I wanted to give a huge shout out and thank you to all of the people who joined the Bear family from the Around the Blockchain podcast. And a big shout out to Ben from BitBoy there for having us on the show and letting us share our thoughts and practicing this kind of what I consider to, on a daily, more and more basis, to be a humbling version of trying to share the day-to-day learning process and kind of just where we are. Again, I've been in these markets for quite some time. I usually am focused on using the trading ranges to when do I lean into positions and when do I make sure I'm in somewhat of a closed out position for the next 2 to 5 years, and then wait, because we actually could be seeing a lot of signal coming in the next little while because the money printer does go burr that we're not done this bull market. So if you're new here, I hope that signal to noise idea was helpful for you. I really appreciate that. Again, we broke 40,000 Bear family because of all the new people that joined. So I just wanted to, yeah, tonight's episode was a specific thank you, and I wanted to talk about signal and noise. Anyways, Steel with the Arcane Bear. Thank you all for joining us. Give us a thumbs up. Leave your guys' thoughts and comments. Especially comment if you just joined, because I'd love to meet more of you as we go. So I hope to see you in the chat. And we'll be back here again tomorrow. Yeah, we're looking forward to that.